Let's bring in Jim Frischling right now, president of NewOak Capital. And, you know, Austin Goolsbee and Dennis were just talking about the housing crisis, Fannie and Freddie, one of the things that has been a big problem with the housing recovery. Investors, though, are trying to find other ways now to deal with Fannie and Freddie, kind of circumvent them, if you will.
I think that's right. I mean, I think that was a really interesting discussion that was just had. In part, I do believe that some of the policies that were over the last few years that went in there did delay the process. It did drag out how you could get delinquent homeowners out of their homes and start letting the markets work. But where we stand today is this new regulatory environment is really making the housing market and other asset-backed, asset classes more difficult for banks to own, to hold. So these regulatory, actions are forcing the banks to be less involved. Freddie and Fannie are dominating the mortgage market. I think somewhere this summer they were represented somewhere around well into the 90s. So the idea that the administration wants to bring down their presence in the residential mortgage market is actually not occurred. It's gone up, but private money is now flowing its way in and looking to, seek opportunities in the space.
So funds are going in, and they're finding other ways. It's like mortgage services, for example. Right. I mean, they're going in trying to find those investment opportunities.
Right. I mean, I think you're seeing a lot of money that, well, first of all, there's a wealth of funds on the sideline, but a lot of money has been deployed from PE firms, from hedge funds. They're looking to buy mortgage intelligence, looking to buy the servicers, they're long capital, they are short on people, and what we're seeing right now is these folks are deploying capital first in the security space. Now they're going to the loans themselves. You hear these stories about REO to rent. Now you're hearing about people buying up homes to sell to these REO guys.
All right. You are recommending something. I think this is off-the-run assets.
Yes.
Okay. We've talked about mortgage service companies, the way to play it on real estate, but you're also saying that people are now looking to profit from student loans, automobiles, credit cards, trucking, containers, life settlements. But what do you mean by off-the-run? I can go out and buy shares of Visa or MasterCard.
Sure. If you think about the financial crisis, you think about the world of securitization, I think the residential mortgage market gets the most headlines because it's about an $11 trillion market for this size. But you're talking about loans that ended up being repackaged into securities, and these securities sold to investors. And the crisis has, to a certain extent, made a lot of these assets less desirable, less easy to hold, and there was money that has been flowing into the market to buy these assets. So the resi market, we've been talking about the uptick in housing. There are other comparable products, loans, for example, for autos, loans for credit cards, loans for the student loans we talked about. And what we're seeing is the banks are less willing to hold these assets, a number of traditional investors less willing to buy them. So we call them off the run because they require far more due diligence, far more investigation, but you can get paid for buying them right.
Real quick, fourth quarter GDP, we took a hit. Are you worried? Part of that was the storm.
Yes.
Massive storm this weekend. Are you worried?
I mean, look, the storm certainly, I think, took a little gusto out of the economy. We're going to see it roll back in because now there's going to be the rebuilding project, a lot of money flowing in. This weekend, I think we're going to take our hits, but as you're going to see, online shopping and a lot of money is going to be spent as people sitting at our desks.
All right, I like that. I like that angle. I wanted to ask you, Jim Frischling, thank you very much.
Thank you.
All right, good to have you here.
Appreciate it.